but for certain individuals, it is a policy that if you're not going to get anything, it's not a bad option to cover those catastrophic type illnesses. Okay, so we talked a little bit about how workers can protect themselves from financial ruin due to disability. Let's talk about how a retiree can protect their family and their assets while making a very difficult decision easier. There's a lot of options for long-term care. Obviously, some are more attractive than others. If you can get long-term care through the workplace, certainly take a look at that. Through an association, this is important. AARP, USAA, even AAA, many of these associations will offer discounted policies if you're a member, but you have to be careful because they're often watered-down versions of private policies. So it's just really important that you that you recognize that. If you look at getting it through private insurance, that's often going to be one of the more expensive options, but for many people, it's going to be the only option. So this is what we're primarily going to talk about, is being able to get private insurance and looking at the options available to you on the private side. Now, you can self-insure. That is an option. I don't think it's a very good option, as we're going to see how expensive long-term care can be. And last but not least, you have Medi-Cal as an option, which I personally don't think is much of one, to be very frank with you. If you've ever been to a Medi-Cal facility, it's not an option that you really want to explore. Now, what is long-term care? What is long-term care insurance? It's essentially care for chronic illness or disability. And the way that you qualify for coverage is you have to be unable to perform 2 of 6 of ADLs, which are considered the activities for daily living, which is bathing, eating, transferring, dressing, continence, and toileting. So those are the 6 ADLs. If you're unable to qualify for 2 of those, then your long-term care coverage will kick in. It may provide for nursing home, assisted living, or at-home health care, which is important, and I'll touch on that. Nursing home care is actually certainly in a facility. Assisted living is where you can somewhat take care of yourself, but you need to have nursing care. You need to have some assisted care. So it is another type of facility-based care. And then at-home health care, where you have a qualified health provider that comes to your house on a daily or 3 or 4 times a week basis. Some policies will reimburse a loved one for your care. Now that's attractive to a number of people because it allows you to stay in the home. And if you're married and you have your spouse is able to care for you, it will provide a stipend to offset any type of additional costs that you may incur. For instance, not being able to work, or if you're retired, be able to offset some of the additional costs that you incur when somebody does require long-term care. And your premiums are often based on age. They're based on health benefits, based on health and based on benefits. So, again, it's similar qualifications to disability insurance and to long-term care insurance. Long-term care is an example. We have a married couple here, age 60, in good health. They have a $7,500 a month benefit with 5 years of coverage. There's a 5% inflation rider attached to this policy for 20 years. Now, I'll tell you a little story here, something to look out for. This is a potential pitfall. If I just call up a carrier and I say, okay, here's the situation. I read out, just the couple's age, if they're in good health, and approximately how much coverage I need, I'm going to get back a policy that has every rider imaginable attached to it. And a rider in insurance means money, just for those of you who aren't familiar with insurance. Anytime you see the word rider, it's costing you something additional. So when we look at these policies, we really want to be careful as to what riders we're choosing because every rider increases the cost of the policy. So if I took the inflation rider off of this policy, but I included an option to purchase some future inflation, meaning that I'll have a bigger benefit over time, that the policy annual premium drops to $2,650. And you can really see the difference in how these riders impact an overall, an overall policy cost. And that's one of these things where I think, you want to make sure that you're taking a real look at, because if you're adding these riders, whoever you're dealing with is adding riders that are really not needed, the cost of care is going to be, or the cost of the insurance is going to be much more expensive than necessary. So it's an important point that I wanted to make sure everybody was aware of.